Good day to one and all. This is Dr. Sivaraman of iknowindustries.com. We are into the new week, 8th to 12th of August. So today we are on 8th of August. I am going to give you the expected market moves for this particular week during my Asian Session Live Market Analysis and Forecast webinar. So during the webinar, normally I give the forecast for Monday to Friday, all the 3 sessions of that day, and also do the market reading, explain to you how exactly we have to do the market reading from time to time and see how exactly the players intend to make the move, whether in line with that of the forecast or against, depending upon the trader's open position. That can be done with the help of the live market code page. Now, if you see that live market code page, you will see Euro is in positive net change, GBP is in positive net change, but USDN is also in positive net change, indicating there is an upward move in the case of yen and yen crosses. So in the case of yen, they are making the USD weakening move, USD gaining move, and in the case of Euro and GBP, they are making the USD weakening move. So that way they make the contrarian move. Again, here you come across that Australian dollar as well as Canadian dollar are showing negative net change. So Aussie is showing the USD gaining move, Canadian dollar is showing the USD weakening move. So that shows that they are making contrarian moves. Some currencies making the USD gaining, certain other currencies making USD weakening, and that sort of contrarian moves are done in order to handle the crosses. So the players are known to make such varied moves in the market from time to time. People might be wondering why they make such moves, and we need to understand that they make the moves which are very purposeful. So they induce the traders to commit positions or make some moves to induce the traders to commit positions and later on act against. So there are 2 purposes. One is if the traders have already taken the positions, then they will try to move against and earn money out of that. In the event if the traders have not taken position, then the players will induce them to commit position. By making a dip, they will induce the traders to take a sell, and making a rise, they will induce the traders to make a buy. And also, they will spread the sentiment in the market. Sometimes they will simply say that it is a dead cat bounce back. So immediately everybody will think that, okay, when Euro and GBP gain, then we should sell. That is how they just give that impression to that of the traders. And once the traders commit sell positions, then the players gain the levels and trap them. On Friday, Thursday and Friday, they made the drop in the case of Euro and GBP, and also in the case of USDN for that of BOE interest rate decision, and also for that non-farm payroll. And then subsequently, towards close of the year session on Friday, as I explained, that they formed up from that of the low, and then now you come across that they are gaining the levels slowly during that of the Japanese session. So this is how they create the market sentiment and act against that of the traders' open positions. So we need to understand, and we have to commit positions only when they are making quick moves in the market. Now let us see the derived forecast, and later on I'll explain to you the market reading and the trading strategy. Now this is the second week of August. So during that of the mid-weeks, they make normally the trending moves. The trending move is expected to be swing and rise move in this particular week. So week beginning false move, they are expected to make a small slide or sideways move and then start gaining the levels during the rest of the days. So normally week beginning false move, they make it in order to induce the traders to commit positions, and later on they just make the opposite move in order to induce the traders taking the wrong positions to go in for a short covering, and thereby the players are able to happily earn money. So follow their intentions and then try to trade in the market. And now from second week onwards, you can do position trade. During that of the last week and the first week, You are advised to do only that of the swing trade because the players make either way stop and moves. And last week you would have noticed how they quickly gained and dropped in the case of Euro and GBP, telling some story. As a result, you find that whether you are taking a buy position or a sell position, if you don't close it in time, then you might end up in loss. And that is how they make the moves. So hence, it is better to do the swing trade. Just once the profit is seen, you can keep stop at entry and then use a trailing stop to close the position with the maximum profit. The next week will be the third week of August. Again, they are expected to make the trending move. This week, what are the type of moves they are expected to make? Today, 8th August, they are done a brief downward move, dip, and then firm up for about 15-20 pips. They just set the lows lower than that of Friday close and then started gaining the level. Now they are in positive net change. Then they are expected to make a swing and form up move or rise during that of the European session. Then again during that of the US session, they are expected to make a swing and slide, and towards close they are expected to form up again during the US session. So that's how they are expected to make the false move on the downside today. And tomorrow they are expected to make a small dip during start of the session and then rise during that of the European and the US session. And then day after tomorrow, 10th of August, Wednesday, they are expected to make a swing and slide during the Japanese session as an extended move. And the intentional move will be on the upside during the European and the US session. Normally, the intentional move, they do it for two sessions on the start of the third session. Then on Thursday, they're expected to make a dip and then rise and then make a slide. And then again during the US session, they're expected to rise as either way stop and moves. Then on Friday, they are expected to make a swing and slide as a sideways move and then start gaining the level during the European and the US session. So these are all the expected market moves for this week. And I'll come back on Friday and review the forecast, what I have given it, and then we will be able to understand how the forecast is reliable. Now, everybody is of the opinion, or predominant of the traders might think, because the non-farm payroll was so nice and it was more than expected, so US dollar is expected to continue to gain. That is what people will think. But players are here to act against such sentiments. So they are expected to gain the levels with the help of the market reading. We'll be able to understand that. Now, the expected range in which the currency is expected to swing in this week, Euro could swing from the 1.1050 to 1.1475 and GBP 1.3050 to 1.3525 and USD from 102 to 106.75. All the currencies are expected to make swing and rise more alternatively. USD CHF 97.50 to 99.75. Then Canadian dollar is expected to swing down from 1.32 to 1.2950. Australian dollar is expected to gain from 75, 76 area to 78 area. Now let us do the market reading. I noted down the initial lows and the highs around 3:30 GMT in the case of 4 majors and 2 commodity pairs. Now let us see where exactly they are taking up the market. 1.1080 was the initial low in the case of Euro, and then 1.1100 was the initial high. Now they cut the initial high and staying above there for more than 30 minutes. So indicate that they wanted to gain levels. Then in the case of GBP, 1.1068 is the low, 3068 is the low, 1.3097 is the high. They are holding GBP in the middle level without breaching the low or the high. Then in the case of yen, 101.86 is the low, 102.27 is the high, They are not breached the low or the high and holding around 102. So anywhere, any level below that of 102, you can capture the buy position and they'll be able to gain the level slowly. In the case of CHF, 0.9787 is the low, 0.9815 is the high. They are not breached the low or the high. Then Canadian dollar, 1.3167 is the initial low. They just breached the initial low and staying below that, indicating that they will slowly come down. 1.3090 is the high which has not been breached. So the estimated level of 1.32, they just respected it by short of 10 pips and started making the slide, and they are expected to continue to make the slide during this session and the next session. Then Australian dollar, 75.98 is the low and 76.22 is the high. They are not breached the low or the high. Excepting euro and the Canadian dollar, they are not done anywhere. The breaching of the initial low and the high, indicating that they wanted to first of all induce the traders to commit positions by making some contrarian moves, and slowly they are expected to make the US dollar weakening move nominally today, and from tomorrow onwards they are expected to make more visible US dollar weakening moves in the market. Now the recommended trades, as usual, I kept the buy limit order near that of the low, 1.1081, and 1.1145. They could gain about 40-45 pips above that of the initial high to start with, and then keep the hedge order to limit the risk, 1.1050. They could make a small swing during the gap time or during the European session, and then try to induce the traders to liquidate the long if they have taken the long position as a breakout trade, and then start gaining the levels. So now at that time you can take a buy. Always take a buy near that of the low with the hedge of order. You will be able to come out of that position with a profit on the same day. If you take the buy near that of the high, afterwards they made a big drop, then it might be difficult to close the position on the same day, but next day you will be able to close it. So if you use the hedge order to limit the risk, you'll be able to really handle the position on either way moves of the market and capture the profit. Then in the case of GBP 1.3069, just one pip above the initial high, I kept the buy limit order with 1.3145 as the exit and 1.3035 as the hedge order to limit the risk. In the case of yen, 101.87, one pip above the initial high, I kept the buy limit order with 122.55 as the exit and 101.40 as the hedge order to limit the risk. So anywhere if you have taken the position, then afterwards the position consistently make profit for more than 30 minutes and go above, the market goes above that of the entry level and show profit for more than 30 minutes, you can keep stop at entry in the buy positions. Then later on, you can see that they continue to gain and you can take away the exit order or the take profit order above and make the stop at the entry as a trailing stop. So the trailing stop will be coming on the lower level of the market. Below that of the market, the trailing stop will go, and above that of the market, the take profit order will run on the upside. So as both of them run upside, as the market goes up, and they will not be filled, suddenly if the players reverse the market and drop, then your stop will be filled. Suddenly if they make a big jump, then your the take profit order will be filled. Then what will happen? Whenever they make a quick move, they will reverse it very fast, so that you will be able to exit at the highest level, almost close to the highest level, with a profit, with a maximum profit. So that way you will be able to really maximize the profit also. So follow the trading strategy. You'll be able to really find that trading is a child's play, and you can easily systematically do that without any difficulty, and there is no need of making any complicated study whether the market will go up or come down and things like that. And you can easily understand either in the hedging or in the buy position, you will be able to make profit. And later on, the other side will also make the profit. If you want to improve the trading strategy, then you can go in for an averaging after a drop of 150 pips or 200 pips. Take another position and close both the buys above the average so that you will be able to exit out of the positions during the bounce back of the market. So always keep in mind, irrespective of the market condition, whether the market is making one-sided drop or one-sided rise for some time, you can still use the hedge order to limit the risk and to maximize the profit by doing either way trades. And this is applicable only to that of Euro and GBP. But in the case of other denominator currencies and also in crosses, they do the one-sided move for a prolonged period for about a week or 10 days or sometimes 14 days, etc. In such a situation, it is not advisable to go in for straight use the hedge and book profit on the hedge or book profit on the buy side. In the case if it is hedged, then you have to keep stop at entry in the hedge and take another sell and book profit. And this hedged position will remain as such. The other sell position, if it makes, say, for example, 100, 150 pips profit, you can close the original position with 30, 40 pips loss so that net profit will be 70 pips. That way, you can improvise the trading strategy, and then you will find that irrespective of the market condition, you are in a position to earn money. So for that, you need to know the session timings. So a day is divided into 3 sessions as far as Forex market is concerned. It is a 24 hours market, and you come across there are 3 sessions apparently formed, namely Japanese, European, and the US sessions. Depending upon the country wherein daylight is seen, and then afterwards you find in between the sessions there are gap times. During the gap time, the players make false moves. So during the session, early and the late sessions, they handle the majors, and during the mid session, they handle the crosses by making contrarian moves of this nature. With the help of the net change, you can easily understand what sort of contrarian move they are doing it. So when they are making contrarian move, don't take position in the majors because that will be testing your patience. When they are busy in crosses, there's no point in taking position in majors. Then your patience will be tested. Instead, you can take position in the cross and book some profit. Otherwise, wait for the late session. Then they will make some whips or moves. At the time they make a dip, then take buy, and then quickly book profit during the rise. And in the gap time, they will make false move, which will indicate what sort of swings they are going to do it during that of the start of the session. Suppose if they gain quickly the level during that of the gap time, make a brief upward move to that of the high or slightly above that of the high as a stop, and then during the session they will make a slide. So for about half an hour to 1 hour, they will make a slide. At the time, you can capture some position, and then the opposite they will do it during that of the session. So during the late session, you can capture the profit in the buy position. Then again, you can see that during the gap time before the start of the US session, they will make the swing on the downside, and that will indicate that during the session they wanted to rise. Then gap time moves or false moves. Then if they make a dip buy, we'll be able to book profit during the rise they are showing during the US session. That way you can determine what sort of moves they are going to do it and enter and exit out of the position, especially Euro and GBP during that particular time frame. And follow the times, then you will be able to easily understand how the players specifically change the market sentiment and also the market trend from time to time. And early and the late sessions, you will find they will move it in the same line But during the mid-session, they will make the swing on the up and down move and a contrarian move. So if you follow the move during the early and the late session, then you'll be able to understand if it is an uptrend, they will make a downward stop and then start gaining. If it is a downward move, then they will make an upward stop and start making the downward move. So if you take a sell position during the early session, put profit during the late session, not before that, or not identifying the stop, the support and trying to take it. And the players invariably see that the traders follow such resistance and support and try to take positions and pivot points and take positions. So the players invariably disrespect such points and confuse the traders, and then later on make the moves. So if you simply watch during the late session and book profit on the buy sell side for the sell position, you'll be able to really maximize the profit. So the trading strategy following the time frame is vital. Thereby, there is no need to do the scalping, etc., without understanding how exactly the players are going to make the moves. The traders get into the scalping only when they become distressed. Once they find that following any of the technicals or fundamentals, if they are not able to book profit, then they go in for a scalping technique in order to earn back the lost money. So what they do is they simply take position, and if there is a rise or a drop of 10 pips, either they close the position or book profit of 10 pips. Then again they re-enter into the market. That sort of scalping, they do it without a stop. But suddenly, if the knee-jerk reaction happens in the market, they will be caught vulnerably. All the 10 pips trade, if they are done in one go, if there is about 150 pips drop against their position, they lose about 150 pips, earned 100 pips during all the 10 scalps, and lose 150 pips. Then they find that they are no way having a headache in trading strategy. So they become highly distressed, emotional, and also their BP goes up. Because of that, they become sick. So ultimately, don't become addicted to trading. That is not our objective. We have come to the market to earn money from the market, not to become addicted to trading, and not to be simply talking about the economic conditions of various countries when there is no listener for us. Because we can talk about the economic conditions of various countries, and the people who listen, simply they wanted to know what is your opinion, whether euro is going to go up or come down. But you will be talking about the economic conditions of various countries and say that because of that the market currency is moving upward and then downward. And the very next day you see that the market is making just opposite to that of the whatever the sentiment created. Then you will not be able to have any appropriate answer to such change of market sentiments. So always keep in mind it is a manipulated market. Men make the moves in the market against the sentiments created. So they mainly create the sentiment in order to induce the traders to take position and later on reverse it so that the traders get caught vulnerably. So if you want to be a smart trader, identify the type of moves they are doing it. When they are making intentional move, don't do contrarian trade. When they are making extended move or a stop and a quick move, then take counter trade. Then you will be able to book profit. These are all the simple steps. If you follow, you will be able to earn really from the other market. So if you got any questions, kindly ask me. I'll be willing to answer those questions. You can ask the questions in the question window, which is displayed here. I'll be able to see the questions and answer those questions. For the latecomers, I'll just display the forecast sheet. But any doubt, you can ask me. Follow this particular week, and then later on you understand, because the first and the last week they will really create and the market confusions. And during that of the second and the third week, they will make the trending move. Then we'll be able to really understand what trend they are going to set in this particular month. That will be able to help you to easily take trading decisions. See, from which side you are taking the initial high and the low. See, this is the live market code page. I go on the link. There is no need of noting down the day opening price, because they open the day depending upon the closing level, and also normally the opening price happens when there is a high level buy or a lower level sell order is triggered, and that happens when the pre-orders start getting executed automatically. So that is of no significance. The players allow such things to happen. Later on, they set the initial low or the high by 2:30 and the opposite by 3:30 GMT. They set the low by 2:30 GMT, then set the high by 3:30 GMT. The high is set by 2:30 GMT, then the low is set by 3:30 GMT and start making the swing. Today they set the low and afterwards set the high. They are swinging around that of the high. That is how they make it. Any other question? So follow those initial lows and the highs and see how they are taking the market above it or below it to identify the type of moves for the session. And in between session, they make that false move or the stop end. And during that of the session, early session, whatever the move they do it, if they do it on the downside, the late session they will make it move on the upside. So during the downside move, you buy, upside move, you book profit. During the day, early session, if they make an upward stop end, then take a sell. Then during the late session, they will make a downward move, book profit. That will be the session-wise trade. Then Grace, you were saying that we can do position trade this week. What is your view on gold and oil? So gold and oil, they are expected to make a downward move initially to start with today and tomorrow. Then afterwards, it will start making the gains. But the gains will not be as significant to that of the Euro and GBP this time. Normally, gold and oil, they handle very aggressively during the month end and the month beginning time. What is your view on Euro Yen and Euro GBP? Okay, Euro Yen, as you see that Euro is in positive net change, Yen is also in positive net change. As a result, Euro Yen, they are trying to gain the level. Already last week, they made the downward move in the case of Euro as well as Yen, and beaten down Euro Yen to 112, 113 area. They are expected to consolidate here today and start gaining it from tomorrow. Yes, tomorrow from Japanese session. And especially Yen and Yen crosses, they will handle it very actively during that of the Japanese and the US session. During that of the European session, not much of a significant move will be seen in the case of Yen and Yen crosses. Follow that carefully, you will be able to understand how the players handle two pairs at a given time. And Yen, they don't handle it during the European session much of an occasion. And they handle it during the Japanese and the US session. If you want to really capture the maximum profit, then try to wait, take the position during the Japanese session, close it during the end of the day. You will be able to get the maximum profit out of that. Then what about Euro GBP? Now Euro as well as GBP both are in positive net change and almost equal. So Euro GBP will be almost flat. 1 pip positive net change. So around 85 area, they will try to build sell positions and start making the slide. At the maximum, they may go up to 86 briefly intraday and come down. They are holding and building sell positions in the case of Euro GBP. Because of the British exit, they just gained, the market gained the levels in the case of Euro GBP, and then they try to build sell positions, afterwards gain levels in the case of GBP and drop Euro GBP. This is what normally they do. During the multi-year trend reversal time, they took Euro GBP to 0.98 level. They said that GBP could merge with that of Euro. You know what has happened? Subsequently, it has made a big drop and came down to 0.7269 briefly intraday, and then started gaining the levels. So that is how they make big moves in the case of crosses, by making contrarian moves in the case of majors. So that we have to follow with the help of the net change. So buy and sell trade in the case of GBP, Euro GBP may not be rewarding much. But whenever there is a quick rise, when it is flat, don't take any position. Whenever there is a quick rise, when the new high is not been breached for more than 30 minutes, during the mid session, take a sell, then you will be able to make profit on the downside. And it might give that impression to that of the traders, GBP could drop more and US Euro might not drop more, and things like that. But the players are here to create such sentiments and act against. And you know that GBP came down to 1.28. From there, it has gained back to 1.30. Those who are liquidated out of fear after the British exit, you can understand what would have happened to them. Market rewards patience. That's what we need to understand. Then, Grace, you are saying about the market players manipulating the market after the non-farm payroll besides USD and Euro. What other currencies should we take note of? See, they handle mainly the majors. Whenever the US dollar news is there, wherever US dollar is involved, like Euro USD, USD Yen, GBP USD, then USD CHF, then USD Canadian dollar, Australian dollar, US dollar. So when it is a US dollar data, all these majors, that is why they are all called majors. Of that, these two are called commodity majors. And these four are the majors now. Earlier, there were about 9 majors, and then subsequently they are all amalgamated and become Euro. So that is why you come across only 4 majors now. And so whenever there is a US data, these 4 majors will be influenced. Besides, the commodity pair will also be influenced. And you might think that the crosses don't have any USD, see, excepting New Zealand dollar, Euro Yen, Euro GBP, and Euro CHF. You might think that they don't have any US dollar involved in that. But when they make the contrarian move, that is making USD weakening move in one currency and USD gaining move in another currency, they can bring in the volatility in the respective crosses. So that is how they make it. So we need to read it carefully. Okay. Can I take it that the commodity majors will be weaker this week after non-farm payroll? On what assumptions you are taking that, assuming that commodity pairs will be weaker? See, after non-farm payroll is a data which is used to trigger the market for last week and to create the sentiment for the beginning of the new week. And afterwards, the players will simply discount the non-farm payroll data and start talking about the other fundamental data. So don't immediately come to the conclusion after the non-farm payroll, you have to take the positions in commodity pairs or the majors, etc. Normally, if you watch carefully, commodity pairs lead the rally. They gain the levels during that early part of the week. They lead the rally during the week beginning time, and then slowly they will just lag behind on Thursday and Friday. So if you take buy position in the case of commodity pairs, then try to book profit before Wednesday. Then Thursday and Friday they may make sideways on the drop. So that is how the commodity pairs make moves. Majors, they make either way volatile moves. Euro and GBP, they make either way volatile moves. Whether you buy a position and calmly hold it, sell a position, take a sell position and calmly hold it, and with it, take profit order for 45 pips or 75 pips, your order will be filled in that week. You will not come across big drawdown during the trending time. And in the case of yen CHF, they make the week beginning false move, then subsequently they make one-sided move. If you don't follow it carefully in the behavior of those denominator currencies, then you might be caught vulnerably. Okay, thank you. So no more questions. So I take this opportunity to thank FX Street for the facilities provided to present the webinar and for your kind presence to listen to the webinar and try to improve on your trades. And always keep in mind that nobody will be able to give 100% perfect forecast. And there will be an element of error involved. So whatever be the forecast you follow, you try to do the market reading, find out whether the players are really making such USD weakening or USD gaining move in all currencies, then take positions. And also use the trading strategy of using the hedge order instead of stop, so that you'll be able to really limit the risk and maximize the profit. Ultimately, nobody will be able to help you in making money, and if at all anybody can help you in this world, is only yourself. All others can talk about the market and give various ideas, but only you can make your own money. So develop the self-confidence, then you will be able to earn your money from that other market. Wish you all happy trading. See you on Friday.